The empire built on one bold bet. It began with a decision so audacious that most people dismissed it instantly. One investor saw opportunity where others saw danger, and that single choice would ignite a rise no one predicted. This story matters now because the biggest fortunes often come from moments when the world hesitates. In today's markets, where fear and uncertainty shape every headline, understanding how one bold bet can rewrite a destiny reveals a thin line between brilliance and disaster. To grasp that line, we need to revisit the moment when an untested idea became a foundation for an empire. It started with a company everyone had written off. Its growth had stalled. Rivals were gaining ground. Analysts called it outdated, inefficient, a relic of a past era. Investors stayed away. But one man saw a pattern others ignored. Hidden in years of overlooked data, he found a weakness, not in the company, but in the assumptions surrounding it. Its assets were undervalued. Its strategy was flawed, yes, but not unsalvageable. He believed that with the right pressure, the company could pivot and surge. He didn't buy a few shares. He went all in, building a massive position, one that would either elevate him to legend or bury him in silence. Friends warned him to stop. Advisors questioned his sanity. His reputation trembled on the edge of risk. But he pressed forward, convinced that the world had missed something fundamental. Soon, the first cracks appeared in the market narrative. A small improvement in the company's quarterly report. A new executive with a fresh vision. A shift in product strategy that hinted at deeper change. None of these moments were spectacular on their own, but they formed the early reveal. The company wasn't dying. It was transforming. And as his conviction solidified, the bet that once looked reckless began to show the faint outlines of possibility. Momentum gathered slowly, almost invisibly at first. The company's improvements were modest. Slight upticks in efficiency, a handful of strategic hires, a cautious new roadmap. But to him, each signal reinforced a trajectory he had seen long before anyone else dared to notice. He wasn't betting on the present. He was betting on the shift beneath it. Other investors remained skeptical. They clung to old reports, old narratives, old fears. Their models still projected decline. Their analysts still recommended caution. But markets rarely turn with a headline. They turn with a change in belief. And belief, once sparked, spreads in subtle ripples. Each small win drew the attention of a few curious fund managers. Each uptick brought in a handful of new speculators. The stock price, long stagnant, began inching upward. He watched the movement carefully, resisting the urge to celebrate. Early gains mean nothing if the foundation is weak. But with each earnings call, he could hear the shift in tone. Executives spoke with confidence instead of apology. Their goals sharpened. Their plans became ambitious. What once felt like survival now sounded like strategy. The reveal deepened when institutional investors finally noticed the same signals he had seen months earlier. Funds that once ignored the company began initiating small positions. Research reports changed their language, cautiously optimistic, improving metrics' potential upside. These weren't declarations of victory, but they were cracks in the old consensus. Still, the conflict simmered beneath the surface. Transformations are rarely smooth. The company faced operational hurdles, backlash from long-term critics, and supply chain setback that rattled the stock for weeks. Each challenge threatened to undermine the fragile momentum. Traders wavered. Analysts questioned whether the turnaround was real or just a temporary illusion. But he held firm. His bet wasn't based on quarterly results. It was built on a vision of what the company could become if given the chance to evolve. And slowly, that evolution was taking shape. Bit by bit, decision by decision. By now, whispers had begun circulating through market circles. Who was the investor behind the massive early position? How did he see the shift before anyone else? Why was he still buying when the risks were so obvious? The answers remained hidden, but the signs were unmistakable. The company was no longer the relic it once appeared to be, and the market, for the first time in years, was beginning to believe in its future. The early conflict was emerging. Progress and doubt were colliding, setting the stage for the moment when the bold bet would either ignite into triumph or collapse under the weight of its ambition. The turning point arrived with a shock that split the market's confidence in two. A leaked report suggested the company's restructuring plan was faltering. Production delays, rising costs, internal disagreements. None of it was confirmed, but the rumor alone was enough to send the stock into a tailspin. Within hours, prices slid sharply, erasing months of steady gains. Traders panicked. Analysts rushed to revise their models. Commentators declared that the turnaround story had been a mirage. For many, it was a vindication of their skepticism. The company, they said, was returning to its old, failing trajectory. The narrative that had begun to shift now snapped back with brutal force. He felt the pressure immediately. His position, enormous and exposed, was suddenly underwater. Messages poured in warnings, lectures, thinly veiled "I told you so's." Some urged him to cut his losses before the slide became irreversible. Others insisted the rumor was a sign that his original thesis had been flawed all along. But he stayed calm, studying the data with the same intensity that guided his original bet. The fundamentals had not deteriorated. The improvements were real. The rumor lacked detail, lacked sourcing, lacked the weight of true insight. And yet, markets don't wait for clarity. They react to fear long before facts arrive. The conflict escalated when the company scheduled an unscheduled press call. Speculation exploded. Was leadership preparing to admit failure? Would they announce delays, write-downs, or executive departures? Traders positioned themselves for disaster. Short sellers piled in with renewed confidence. The stock dropped further, the decline feeding on itself. When the call finally began, the tension was electric. The CEO spoke with surprising steadiness. Yes, challenges existed. Yes, restructuring was messy, but the core pivot remained intact. Progress continued. Early results were promising. And then came the surprise, an upcoming partnership with a major industry player, one that would accelerate the company's transition and open new revenue streams. A partnership so unexpected that even seasoned analysts were caught off guard. The market froze. Short sellers scrambled. Traders hesitated. Algorithms recalibrated. The stock, which had been dropping all morning, suddenly halted its descent. Then it bounced, slowly at first, then with rising force as investors processed the significance of the announcement. But this wasn't victory. Not yet. Volatility surged. Some believed the partnership was a lifeline. Others believed it was a smokescreen. Trust remained fragile. Every positive signal was met with equal doubt. The market hovered in a state of fragile equilibrium, tore between fear and possibility. For him, the moment felt like standing in the eye of a storm. Calm at the center, chaos swirling around him. His conviction, tested and stretched, held firm. The bull bet had survived its first real trial, but the path ahead remained steep, uncertain, and filled with forces eager to prove him wrong. The build-up toward the peak had begun, and every decision from this point on would determine whether the empire he envisioned would rise or crumble before it had the chance to stand. The breakthrough came with a moment so sharp it felt like the market inhaled at once. The company released its next quarterly results, and for the first time in years, the numbers didn't just improve, they surged. Revenue climbed, margins expanded, market share ticked upward, and most importantly, the partnership announced weeks earlier began delivering early signs of traction. What had once been dismissed as a fantasy was now unfolding in real time. The climax hit with a surge of momentum that swept through trading floors across the world. Funds that had ignored the company scrambled to build positions. Analysts upgraded their targets in a rush, revising pessimism into optimism with every new chart. The stock didn't just recover, it exploded, rocketing past levels few believed were possible. That single bold bet, once ridiculed, had become the engine of a rising empire. He watched the numbers climb with a quiet intensity. This wasn't vindication born of luck. It wasn't the triumph of ego. It was a confirmation of a vision that endured through doubt, fear, and relentless pressure. The world finally saw what it had seen years earlier. Potential buried beneath neglect, waiting for the right spark to ignite. But the story didn't end with the victory. The resolution came as he reflected on the journey, not just the gains, but the cost of belief. He understood now that bold bets are not about confidence. They are about conviction strong enough to endure the moments when everything seems to be falling apart. They require patience, resilience, and a humility to accept uncertainty without surrendering to it. This modern market relevance was unmistakable. In a world obsessed with speed, instant results, and the illusion of certainty, true transformation still comes from those willing to look deeper, wait longer, and risk more than others dare. Empires aren't built on perfect timing. They're built on the courage to see value where others see nothing but noise. So as the company took its place among the market's new leaders, he understood that his gamble had become something larger. A reminder that every great rise begins with a single step into the unknown. Subscribe to be part of the adventure.